Last week, we sold your exposure to Latin American markets within your portfolios, and I'd just like to talk about why we did that. The Latin American market consists of Brazilian equities, Chilean equities, Mexican equities, Peruvian equities across the region, and it's Colombian equities as well, but only a small proportion. The majority of shares in that region are Brazilian shares and Mexican shares, and in about a 75-25 ratio about a year ago. Now, over the last year, the Latin American market has been very weak, almost flat type returns over the year, just slightly negative. What's happened in contrast in the UK is the FTSE 100 has risen by about 14%. So that shows you how weak returns have been. And it might help if I explain a little bit more why. So the Brazilian stock market is largely made up of energy companies and materials companies. You may be familiar with Petrobras, which is one of the largest oil companies in the world, and it's the largest stock in the Brazilian index. Now, what happened last year was that stock lost 32% in value. It wasn't really representative of the returns across the whole of the Latin American region, because there was a mobile telecommunications company in Mexico that went up 5.5%. But because Petrobras was such a big stock in the index, it had a massive influence and really contributed to the flat performance of Latin America last year. Petrobras is 50% owned by the government, and we've been getting increasingly concerned about government intervention in companies in countries like Brazil. So what we've done is we've cut our exposure to that region over these concerns about increased government intervention. Free trade is a really important characteristic for companies to operate efficiently. And what's happened in Brazil recently is that despite massive infrastructure investments needed, the Brazilian government is influencing those decisions. And that cannot be good for the operation of a company within the stock market index. So we've taken off all exposure, and we keep broad emerging markets exposure within Asian companies within the portfolios at present.